Take a look at the interest rate market today. I want to focus on the 10-year note. 10-year note, a big mover today, along with all the durations. We saw a significant move, reversing yesterday's move. The 10-year currently trading right around the 130.16 level. We saw a high of 130.22, a low of 129.21. So another volatile session today. But certainly when you look at the different durations, we saw a substantial bid coming back into the bond market today as we saw equity selling off, reversing yesterday's trends. We saw some weakness coming out of China overnight from a manufacturing standpoint, retail sales, and that moved its way into Germany. Some disappointing numbers coming out of Germany, and then we saw some significant selling pressure right from the get-go in the equity markets here this morning. And that's what led to this big bid, I believe, under the bond market. Looking at the 10-year yields right now, currently right around the 1.59 level. Now, we did see a low yield today of 1.574. So I think that's a new, again, low yield print for the last 3 years. You have to go back to September of 2016 to find the 10-year with yields hovering around this 1.57 level. Also, I want to point out, as I mentioned yesterday, big talk down here today, and will continue to be the talk, the yield curve inversion. We finally experienced today the 2-year, 10-year yield curve inverting intraday. Now, we saw it settling back basically where it closed yesterday, about 1 basis point, 1.5 basis points out of inversion. But nonetheless, we are seeing the yield curve flatten substantially. There's a lot of discussion now about what that means for recessionary potential moving forward, and also what the Fed will have to do when they meet once again in September. Will they wait until September to make a move, or will they make a move potentially sooner than that, possibly even Jackson Hole at the end of this month? Also, I want to point out, when you see this type of volatility, I look to the options markets, and we're seeing some big volumes there as well. We're seeing some very substantial activity in those September options. Looking at the put side, we're looking at the 130 and 129.5 and 129 puts, all substantial activity there, better than 15,000 contracts traded on all those lines. And you look at the call side, we're looking at the 130.25 call and the 130.50 call. So you're looking at these calls just out of the money and the puts just out of the money. That's where the big activity here. It looks like there's a lot of hedging going on here as we move into the September cycle. And certainly when you look at the volatility the market's experiencing, I think that you're going to continue to see elevated options trading activity, given the fact that we are moving through strikes here pretty rapidly in the last several weeks.